And content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance referenced is historical, no guarantee of future results. All indices are unmanaged, may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, a member of FINRA and SIPC, and investment advice is offered through Gimbal Financial, a registered investment advisor, and separate entity from LPL Financial. Oh, it's good to be back. Hey, guys.
How you doing, Amanda?
I'm good. I'm good.
Did you ever notice right between Doug and me that the bear is getting assassinated down on the bottom of that picture?
I shouldn't. Oh, yeah.
Right there.
Yeah. That bull was so prominent in the picture. That's definitely.
It's hard to be a bear in the market.
I've never noticed that. Yeah. We have another bull and bear over here. And I learned over the summer, I am definitely scared of bears. We encountered a bear. We were in between a cub and mama. And yeah, I'm afraid of bears.
What about bulls? What do you think about those? I bet you've been cow tipping a few times. So bulls are out there somewhere.
Just because I grew up in Delaware County doesn't mean I went cow tipping. But the boys did sit on a bull while in Wyoming, and we went to a rodeo where we saw some bulls. I think I would probably be afraid of a bull too.
Bulls are bad to the bone.
I saw these guys try and ride bulls, and they'd hang on for about 8 seconds, which thankfully bull markets last a little longer than 8 seconds.
They do. They do. Did we interrupted you, Amanda? We were kind of a little ADD.
Totally forgot what I was going to say. I was so distracted by the bulls and the bears talk, but I was going to say,
you did great last week. The birds and the bees behind you, Amanda, if you want to discuss that.
There are. Oh boy, we do.
Sorry. Wow.
Oh, that's good.
Too much coffee.
No, you did great last week, minus the little technical difficulties of sharing the screen, but you guys killed it. What are we talking about today?
Well, I think we need to talk about the world. We need to talk about the markets and whatever else Doug's got for us. It looks like Doug and I almost dressed alike. We all got kind of get that blue memo out this week. What do you think, Doug?
Well, I was thinking we touch on the markets, and specifically, we haven't looked at the VIX in a while. I wanted to share what's going on with the VIX. And again, the VIX is just a way to measure the ups and downs of the market as people are voting with their buys and sells. Is that a daily? Yeah, okay. Yeah, check that out. That's pretty encouraging.
Yeah, let's see if it has a weekly. It's not any better. So we go, I'm going to change the date here a little bit to a month or so ago and see if that. Yeah, so going back a month, it takes us back to when the pandemic first kind of unfolded here.
Right.
And this VIX is a measure of options in the market to see the volatility. And this particular one measures the volatility of S&P 500, but I think this was a historical number when that market went into a free fall then. And then it worked its way down and stabilized right here on this 200-day moving average. And it kept popping back up to the 40 level, which was still extremely high. And prior to, if I go back, I'll go back a couple more months and show you kind of where we were prior to, yeah, you can see kind of how we weren't even, prior to the pandemic, we were staying well below the 20s. And so definitely some volatility has been introduced to the market by the things that have been affected by the COVID. I think a lot of that might even be, a lot of the government intervention we've seen that we've never experienced before as a country.
Yeah, and so you see like a move up the other day, and there's been a lot of unknowns in the world. I kind of expected the VIX to rise even more than that, but it backed off, and it remains pretty calm. We need some ups and downs in the market to create opportunities for people. I know I personally like it when my statement just goes up, 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 up incrementally. However, we do need the VIX to have some ups and downs to it in order to shake out weak hands in the marketplace and to see some rotation. So right now, though, it appears to be pretty stable.
Yeah, and we've talked about the moving averages in past weeks, and so this VIX is for the volatility for the NASDAQ. And if you just look at the 200-day moving average, that it really, the volatility started kind of settling down here on the NASDAQ right around the turn of the first of the year. And then if we go back to the S&P 500, it was kind of maybe about the same time the volatility started dropping. Yeah. It doesn't mean, the volatility doesn't tell you that the markets are doing well, because in last week's market, I told you that we had 74% of the stocks of the 89.55 that we follow were below their 21-day moving average, which is the green line there. No, it's the, maybe it is the green line. Yeah. And then 63% were below their 50-day moving average, which is the red line. And then 37% were down below this black line.
And some of those might even be like my favorite household names, like very recognizable names that are just great companies, but at the time, not good stocks.
Yeah, so if we go back to yesterday, so we're showing you historical values. We'll just look at this one. We talked about it last week, and see how it had dropped dramatically this last quarter. And it fell below the 200-day moving average. Now it's trying to recapture that. This isn't a recommendation to buy or sell or anything, just pointing out that stocks are volatile. They can do things that you don't expect. We pointed out also last week.
Can we wait right here just for a second? If you look at this stock, what you're seeing is you're seeing places where people have bought and sold along the way. And so there's people who've bought it near that top number.
Yes.
And what are they hoping? They're hoping that it returns, or, maybe they get to November and they say, I'm just going to take the tax loss on this and fight it. Use that to fight some of my gains. But there's people hoping that it comes back. And so there is a supply just waiting for the price to return. And so the supply and demand side of these stocks is something that we take into account when we're making decisions for you.
I'm going to do a little math here for you. What's this price right here? We'll say 3,600. I can't do this in my head. I should be able to, but I can't. So you guys are going to have to just bear with me.
It's pretty quick math study.
This is a big number.
Yeah, this is a big number. And so what you see on the chart, though, is you see what's a gap. And those gaps normally, we only like to see those on the upside.
Yeah, so this day right here that I've got highlighted, there's a circle right here, and that number down underneath the circle, I think it's more of like a teardrop, is the number 10 million, and that's how many shares were exchanged hands that day. And because the price dropped so much that day, it's saying that there were the buyers were backing away from buying that. If it was a house and we've had the housing market like we've had here, all of a sudden the buyers got anxious and they're like, you know what, I think the housing prices are too much. I'm going to put my offer in, instead of that being a $400,000 house, I'm going to put it in at $300,000. And they all did it at the same time here. And that was 10 million shares of a $3,600 stock. And if I'm doing my math right, that's a $36 billion trading day. That is a huge day. And so what that tells you is that there are a lot of significant people that aren't you and me, Doug. We did not trade that.
What's William O'Neill say? Like, that's not Aunt Sally.
That's not Aunt Sally trading her pension account there. Yeah. That is somebody significant. And we can probably look over here and see who some of the significant people are. You've got Fidelity Contra Fund, Wells Fargo, and none of these are recommendations. These are just people who have significant amounts of these shares, which you can find online yourself. If you go to Yahoo Finance, you'll find that. And so all of those people were kind of having a bad day that day.
And
so
look at that relative strength just drop along with the price and the increased volume. I mean, that relative strength is just basically telling you, compared to other stocks, how is this doing?
Yeah, so the relative strength, that it's relative to the S&P 500. So would it have been better just to have my money in the S&P 500 or this stock? On that day, it would have been better to have your money any place. You could have bought a boat before that. So,
that is a recommendation, by the way. Go buy a boat.
And its sister, not sister, it's relative is over in the
I personally
land of China.
I personally traded this stock, I don't know how many times, a few years back, and I've struggled with this one. And look at that.
Well, there's an old saying that I've heard all my career is don't catch a falling knife. Right. And it would have been easy on this stock to lose money if you were a buyer. Yeah, this thing has dropped more, right in half. And you mentioned these gaps that are these spaces where it didn't trade right here. You know, these are stocks where they have all these gaps like this that tell you probably Aunt Sally shouldn't be investing her pension plan in a company like this. This is a very volatile, hard to own type of stock. And so,
but it's cheap, Keith. It just keeps getting cheaper.
Yeah, that's why you don't catch a falling knife, folks. You get cut.
This is the thought process, though, that we've all been trained to think is I want to pay a lower price for something. Well, the problem with stocks is they just keep going lower and lower and lower, and this can go to zero. Even if it doesn't go to zero, you could lose 50% of your money pretty quickly in a stock like that.
This is a stock, I think. Let me go back.
Okay.
Yeah, I'm going to go back a decade or a couple decades.
This is a stock that even in our own community, right?
Well, it see, maybe I'm on the wrong year. Let me go to this year. Oh,
is that the same company?
Yeah, there used to be a company in Indianapolis that had its office right on the circle.
You might say Powered Our Lights.
It was Indianapolis Power and Light. It no longer exists. It was absorbed by this company, and I'm going to change the date even again.
What date? Okay, so
we're in 2002.
Okay.
And so we were told back when I got in this business that orphans and widows could own utility stocks, right? Like that they are just a safe place. And all I think we want to point out is there is really no such thing as a safe place. So if you would have retired right in here and you thought, I'm just going to hold my Indianapolis Power and Light stock and it was $60 a share, and say you had 1,000 shares of that, that's $60,000. And that was May of 2002. And we're going to go, I'm going to go months at a time and forward here. May of 2002, I'm going to go to the end of the year. We're going to see what it did by December 31st. And see that big gap right there?
Yeah, that's brutal.
That was Indianapolis Power and Light. It gave you that warning that somebody probably smarter than you is getting out of that stock. And then it rallied. You could have bought it down here, tried to buy it. It rallied, 80% or so all the way to this level. And then boom, it came down again. And over here, well, they got a new CEO right here, but you could have bought this at $1.16. Could you imagine that your 60,000 dropped to $1,160? And that's why we just try to educate our friends and our clients that the market is risky. It doesn't matter what company that you think you have, things can change dramatically, and that you just can't sit and suspect that everything's going to work out happily ever after. It may, and at the same time, it might shift away from what you thought. So that's kind of maybe a little education to pay attention to what's going on. We're happy to look at any things that you might have someplace other than a Gimbal and offer you an opinion. I was looking at last week, and I was pointing out that there were 49 or 74% of the stocks last week were below their 21-day, 63% below their 50-day, and 37 below their 200-day. This week it improved quite a bit. We have 49% now are below their 21-day moving average, and 50% below their 50-day, and 33% below the 200. So that would tell you, in general, the broader market had a fairly good week this week. And we'll go to today on this thing. It's here somewhere. Reset to today. And so today, you see that we had this one day that kind of shifted everything around. So the buyers came out, and one of the things that we look for is, did they come out with a vengeance? And you can tell by these lines here when there's buyers or sellers doing things. And so this one day right there, if you come down here, you can see they weren't coming out really aggressively. They put a few buyers pushed the market up, but it wasn't all those great institutions plowing money into that thing.
Yeah, so the news media outlets, I've noticed in my searches of, new highs, NASDAQ, new high, S&P 500, new highs. And to look under the hood and say, okay, what is working? If you own the S&P 500, I just jotted down a couple of things. I found this on Investopedia. Ooh, it's kind of like the Wikipedia for investors. I love that site. I think it's great. And so this is Investopedia. And Apple makes up 6% of the S&P 500 index.
So if you had $1 million in the S&P index, you'd have $60,000 of Apple without actually buying Apple.
Without actually buying. Now, you might even have more than that, because one of the large holdings within the S&P 500 is Berkshire Hathaway.
There you go.
And so Warren Buffett, Berkshire Hathaway stock, you can go take a look at it. This is all just historical information. You could Google what's in Berkshire Hathaway, but Apple's also in Berkshire Hathaway. So Berkshire is a top holding within the S&P 500 by itself. And so therefore you own more than 6% of Apple when you own the S&P 500. There's some other big ones like Google, for example. There's two different types of shares of Google, just like there are of Berkshire Hathaway. And combined, it's 4%. And so just a few stocks really move the needle here. And like we were talking, the ones that are under their 200 or 50-day moving averages, those aren't doing a whole lot. It's these big ones, these big players that I feel like we've been talking about for years that are really moving the dial of the S&P 500. So that's where your risks are.
Well, it's I can't. Oh, so I updated you on how we had the shift this week in the markets, and we'll see as the days go by. I know the historically, when there's the drum beats of war out there, that can cause really added volatility. And as we looked at the VIX earlier, it's kind of shocking that we haven't seen that increased volatility. But so what do we have? The 28th, 29th. 30th. So Tuesday is the 31st is the deadline that the Taliban has set to get those people out of Afghanistan. And so I don't know. If I were going to predict what the market does, I'd predict it's going to get some more volatility, because I don't suspect that's going to end very peacefully over there. But the market doesn't seem to have any anxiety about it. If we go to, if I just switch this S&P date here for you all, and I throw in, this makes me feel old that I can just pick these dates and throw them up there for you. And so this is the summer of 1990. So this was when Saddam Hussein violated the rights of those in Kuwait, and he started marching into Kuwait. And so we had I can't really read that, is that 390 all the way down to 311. So is that 70? Probably a 20% drop here in just a few days. And that was a war, I think, would it be 03? we'll say 04, or 30, 203. We'd already we were coming out of a bear market already. And I think March of 2000 over here, 2003, I mean, was right around here was when we had the second round of war with Iraq, and instead of it doing what it did back in 1990, it actually started rallying here. So you don't really ever know what's going to happen. We could take this all the way back to the Bay of Pigs and take you through all the different conflicts that we've been through, and they don't tend to add confidence to investors, though.
Yeah. There's nothing that says if this, then that.
Yeah. So we'll watch. We'll be your ears and eyes, so you don't have to stay awake and think about these things. We kind of get a kick out of it. I had a different thought. We used to have a tagline on our business card that said strategic wealth advocates, and an advocate's kind of a cheerleader or somebody that's for you. And I still think that's part of what we do. I think we're big advocates of you and not only the money that you've entrusted to us, but with all your resources. I think we're cheerleaders. If you need to make some decisions to bless people in your life, we can help you with that, whether that's to charities or whatever, or to take resources that you have and really use those to bless people. You know, those resources, the longer you have them, my experience has been the less you tend to use them over time. And that's what addicts are for. But if some of those resources happen to be bigger, or their vehicles or things, there's really ways you can bless people with those things. And we just encourage you to think about that as you're going about your days, that there's probably somebody that can benefit, whether you loan them a resource, whether you take them along for the ride, or whatever you might do.
Yeah, there's routine stuff going on in your guys' lives, and then there's big stuff too. And those routines, you might just take a look at them and say, hey, are these routines worth my money? And then reflect back, and maybe just even this summer, where did I enjoy spending my time? And is there a way to do some more of that? Is there a way to grab a hold of some adventures, or maybe it's a possession? I don't know. Maybe it's an experience. But spending money on that stuff and talking about it, that's where life's really at. I don't get in too many conversations where someone says, Doug, what's the S&P 500 doing lately? And we're in the business. Really, it's more like, hey, we're thinking about doing this. What do you think?
Yeah, I think John D. Rockefeller is supposedly said, when he was asked on his deathbed, how much is enough? And he said, $1 more. Right. Supposedly, I don't know whether that's true or not. I don't know John D. Rockefeller, try to give him the benefit of the doubt. But I think if most of us were on our deathbed, one more experience or opportunity with a loved one would probably be a much better answer. And so using those resources, Connie and I, when we kind of wore the kids out with an RV back in 2014. I mean, we didn't literally drag them through the sand and the mountain and things, but we wore them out with just an amazing trip. And when we got back, we got rid of the RV because we didn't think they'd ever want to go again. And we started seeing some interest a couple of years later, but we thought the chances of us using that would be much less as they were entering the college age years and things like that. So we felt compelled that if we got another RV, that we would make sure that we used it in a way to bless other people with it. And we took advantage of this hot market and got rid of it recently, but we kept a journal, and it had a story of its own. It was able to go a lot of places that we didn't go with it, and it made that investment much more enjoyable for us.
Yeah, personal bests. That's some personal best moments captured and written down. I like it.
Yeah. Well, Doug, what else do we need to talk about today?
I don't have anything else on my agenda.
I've got one more thing. I know we do a lot of life with a lot of people. This is piggybacking off of what you were just talking about, but I have some big news to share that I'd like to share with you guys, since we like to do life with you and vice versa, but I'm engaged.
Yeah.
So
yeah,
on that topic, Michael, my fiance, and I are happy to start our lives together in a new journey. And we're just really excited and looking forward to it. So wanted to share that all with you guys.
And that's a theme that we talk about here all the time. But, one of the things that I just love about America, and I love about individualism and freedom and those types of things are young people doing cool stuff. I mean, they're not bogged down like I am. I mean, you guys are adventurous. You get your whole life in front of you. You're willing to take some risks. I mean, I think that's just great. So congratulations.
Thank you. That's all I got. Do you
That's
have any
amazing.
advice for a newly engaged, newly approaching wedding couple coming up? Just hit me up. We'll take all the advice we can get.
All right, Amanda, congratulations. You all
Thanks.
have a spectacular weekend, and we'll hope to see you here next week with some updates and some information that might help you in your situation.
Have a great weekend, everyone. Bye-bye.